Welcome to Pencils Down, a Finalis podcast. This is a show for listeners wanting to learn more about the ins and outs of the private securities brokerage landscape. Each episode will feature insightful conversations with the world's leading investment bankers, placement agents, capital providers, startup CEOs, and more. And with that, let's get into the show. All right, and I'm joined here with Kirk Michie with Candor Advisors. Kirk, thank you so much for joining us here on the Pencils Down podcast.
Thanks for having me, Fed. Good to see you.
Great to see you. I really, one of the ways in which I like to kick off these conversations is really getting a little bit more into the biographical, into a little bit about your career path that ultimately led you to joining Finalis and, launching Candor Advisors. So would love to learn a little bit more about your story.
Well, it's a funny thing. I was at a conference yesterday for woodworkers and furniture makers in Las Vegas. Now, ask me what subject matter expertise I have there. It's zero. However, we've been contacted by a couple of furniture makers who want to sell their businesses, and this has nothing to do with that. But the reason I bring it up is the guy who asked me for my bio kept asking me to shorten it. I said, "Listen, when you're 60 and you've been in financial services for over 30 years, there's only so much shortening you could do. It's just,
You're not, to be clear, you're not going to tell me that you were a woodworker."
I was not a woodworker. I think I made something in shop in high school, and I do remember that the device that I used was called a router. But no woodwork. But, look, Candor Advisors is a boutique investment bank and transaction advisory firm. And what we do now, looking back all the way through the 30 plus years of getting to this moment, it sounds like I was working towards this, but that's just not true. Like what happened is that, there was a series of, good things. I started out as a financial advisor, a stockbroker. And back then, investment bankers wouldn't even talk to me. And this is, kind of back in the 80s when the only way to make a lot of money, because private equity barely existed back then, was to get to the investment banking side of the firm. And I didn't really know what it was, but I was a, retail broker. It turns out that not only after having, built a big book a couple of times, took over the private client group at a really, really large bank, started a private client group at a really, really large asset management firm and, kind of built up an offering and a platform that way, that advice as an advisor, by the time I then went into private equity, I was a partner of a private equity firm, and then decided after a while that advising sellers on how to best optimize, kind of their price, the terms, and the maintenance of their legacy. By the time, I got to that point, it seems like having been an advisor and having spent 3+ decades in capital markets made perfect sense. But if you're asking me if in 1984, when I graduated from USC undergrad with a finance degree, like if I had a plan to be here, no. There's some serendipity, some good luck, some bad luck, and then a few good choices in there.
So much about career journeys are about finding alignment between your personal values and the way that you express those values out in the world. Tell me a little bit about the aspects of launching your own boutique investment bank that you think really connect closely with your own closely held values.
I've gone through the exercise of, kind of figuring out what my values are, starting with a list of 100 and narrowing down in a challenging way to get to 2. And they're integrity and persistent. If I try and trace back to, my earliest memories, I will tell you that I grew up, I wouldn't say that we were poor or disadvantaged, but we certainly were not, we were maybe just below middle class. And went to elementary school in a place where, the BIPOC community was pretty substantial. And the funny thing is that as a 5th and 6th grader, all of the coolest guys in my school didn't look like me. And I wanted to be them. I had no idea how hard, some systemic bias against them was back then. I just saw that they were cooler than me, that they seemed to be more world aware. that they seem to be less insecure, right? And so if you ask me about a through line to today, I will tell you that when I say that the buyer of your business is a full-time predator and you're part-time prey and you need to armor up, we're part of the armor, right? I identify with people who have a disadvantage when it comes to, getting to the starting line. And so what informs kind of the way we give clients advice has everything to do with the fact that they're disadvantaged in the process, and that we can actually be really, really useful in making sure that if you took 30 or 40 years to build a business and somebody tells you that the valuation of that business is going to be the transferable economics that have happened in the last 12 months, and that all the things you think are special about your company will only incrementally count in that valuation, like I'm there as kind of the bulwark against the buyer being able to be kind of abusive in that process.
Well, I often think that, building a business is hard enough. It's the hardest thing many people ever get to do. And so you do feel like there's a built-in imbalance when you speak with, let's say that you're being, a buy side is reaching out to you and is really trying to schedule a meeting, and you're being brought into this meeting and you're being asked to divulge a lot of company information in order to qualify their interests. And ultimately you feel like there's a part of the process that you're not really being brought into and that you're not really seeing. Yeah. Tell me a little bit about kind of how you advise founders to navigate those types of dynamics where there are such inherent information asymmetries in terms of how they will take your information and ultimately boil that down to a valuation.
Yeah. If you go to our firm's website, there's an ebook that is a free download. And then we also have a ton of videos in the insight section of our website that speak to a lot of these things. But I think there are, 6 really key things. The first one is, if founder who's selling, and we only represent selling founders, we don't do buy-side work, we won't advise private equity firms. We're really, really clear about who we work with, right? So when a selling founder knows their why, like what's animating their reason to sell or take some chips off the table, when they get clear about whether it's riding off into the sunset or trying something new or they're just burnt out or whatever it is, when they've nailed that, then the second thing becomes, how do you match up the buyer, regardless of valuation? And, it's been my experience that between willing buyer and seller, valuation gaps can usually get fixed with structure. So finding the right buyer that matches up with the seller's why, really, really key. And then a couple other things that founders don't know that create the imbalance. So the first one is professionalizing their financials. Look, the private equity firms out there doing proprietary deal flow asked for information, first of all, without an NDA or confidentiality agreement in place. And they asked for a lot of private, sensitive information that is only going to work against the seller if it's not professionally prepared. So if the financials don't tell the story that you need to be told to maximize your valuation, right, then you're disadvantaged. And so we make sure that we get there before that. And sometimes, even if they've already, been handed over and we get retained afterwards, we say, well, listen, we're retaining a CPA firm. We're going to do a quality of earnings. So you can play around with the QuickBooks all you want, but that's not the financials that you're going to use for the final LOI. So why don't you go on? And then there's a couple other things. Our experience, Fed, is that the most successful entrepreneurs are very, very good at ignoring well-meaning and oftentimes poor advice. So the idea that they're now going to turn over, the consequence, the residue of the valuation of 30 or 40 years worth of effort to an advisor they just met, we understand that that's hard for them to do. And we try to meet them where they are. We try and explain to them why buyers are the way they are and why the process is the way it is, which then kind of leads to making sure they don't do it on their own. And then the last piece, and I'll tell you that this is, when I talk to other investment bankers, there seems to be no disagreement around the idea that the number one deal killer tends to be seller expectations, arguing with, like, the market is what the market is. And if the market says that businesses like yours sell at 4 times trailing, 12-month EBITDA, and you need 8 times to be able to exit so that net after tax, you can endow the rest of your life. And you're not going to, no matter which investment banker you hire, you are not going to double the EBITDA multiple on your transaction. You do competitive tension and driving a higher multiple might be one thing, but explaining to them that arguing with the market is just a poor use of their time. Those are all critical things.
Yeah, I totally get that. And one of the things that I've been spending a lot of time thinking about as well is the power of compelling storytelling and framing an opportunity or a business in the right light to maximize that valuation is key. I know that you dabbled in a prior life as in acting, and so I think you know a thing or two about storytelling. I'd be curious, and I'm sure for the listeners, to understand kind of how that experience and also your more recent experience at Candor Advisors has really reaffirmed the importance of framing an opportunity in the best possible light for the founder and the power of storytelling.
That's a great question, and one that most people don't really dig into, because I think that a lot of times when you bring up phrases like fear or storytelling with most business people, they think that, first of all, most don't acknowledge fear. And then the other thing is that most people think of storytelling as inauthentic. And, the way we work with founders is, first of all, to make them feel, and forgive me, look, like you, I'm a Californian, so I get a little crunchy from time to time, but we make it feel safe enough for them to be able to be vulnerable, right? And because we want to be able to tell the story in such a way that the buyer feels like they might be overpaying right now, but that they're getting something that has a lot of blue ocean in front of it, and there's embedded value, and that if they do the right things, that this, and oftentimes we'll even tell the founders that, look, if we do this right, if we make this the whole world was convinced that Facebook overpaid when they gave $1 billion to the founders of Instagram. Now that looks like one of the best transactions that's ever been done, because there was so much more value there, right? So, and look, if you got a $5 million in revenue machine shop, or $100 million in revenue and $10 million in EBITDA, distributor of food products, or irrigation equipment, or whatever it is, there's a story behind that business, where it fits and how it can kind of be amplified. So what I would tell you about kind of my aspirations and background is, I got talked out of becoming an actor when I was my college roommate's father was a recognizable working character actor and voiceover actor. And he said, Kirk, I'll help you get your SAG and your AfterCard, and I'll help you, but you have to understand that it took me 30 years to earn a living as an actor. I managed car washes. I was a bookie. I was this, that, and the other thing. And he goes, and you're going to get not hired a lot more often than you get hired. And it's really, really unlikely that you ever become a movie star. And so unless the craft of acting is what you really want to do, as opposed to being a movie star, and unless you're willing to kind of struggle and sacrifice, I'm not sure that that's the right path for you. And so I set it down. I let it go. I have 2 kids who have kind of gone in that direction. I have a son who's starting film school in the fall, and I have a daughter who was a theater kid. She did musical theater for a long time. She was better at that than I think I ever have been at anything. But where it all translates is that all the best investment bankers are great storytellers, and they're great at creating competitive tension. And those things are, kind of tied together. So the way I use it now is, one, with the founders and helping them to collaborate to create the best story for us going out to the market, so that the numbers of buyers can envision this being, kind of part of their deal. And the other thing too is that we publish weekly videos, and we now have a huge library of content. And in a way, while that is purely authentic and what's going on, there's an element of performance to that. And so to the extent that I had any actual talent, I wasn't going to be Kevin Costner. I'm Kirk Michie doing this. It's, Candor Advisors.
Yeah, it's fascinating. There was an old video of Steve Jobs that was circulating LinkedIn, I think yesterday or the day before, where he recounts this story, which is really about getting to the essence of things, of an old man that lived down the street from him in Palo Alto when he was growing up, who had this old rock tumbler. and how, he learned from that, just the fact that any old rock can ultimately be turned into a beautiful polished stone. And when I think about storytelling, I think it's not about manipulating an audience. It's about getting to a beautiful essence of a business, and every business has a story to tell. And it's about getting to that authentic essence of a business that is ultimately going to be seen and valued by others as that beautiful stone, as opposed to that dusty old rock. And I think that process of uncovering that story is fascinating. And I'd be curious just to learn, maybe you have an example from your time at Candor around, an exercise that you might have conducted with a company to try and uncover the true story of a business that ultimately resulted in a great outcome for the company, for the founder.
Yeah, we worked on a transaction about a year and a half ago where we were working with Chinese immigrants who had, they were both PhD organic chemists, one of whom had postdoc under a guy named Roger Shen at UCSD, who won a Nobel Prize in genomics, and one of whom had been an early employee at Illumina. And so they were already pretty comfortable, and they ran a business that generated an enormous amount of EBITDA, like 14 million of EBITDA on 20 million of sales. They were kind of, they were about my age, and they were kind of ready to be done. They were kind of ready to no longer have the pressure. They had their first grandkid. And the thing was, we felt like we could get more than 20 times for this business. But to get more than 20 times for this business, we had to demonstrate to any potential buyer how much more valuable this could be, depending on who you were as a buyer. And so that meant taking somebody who, even after 25 years of being in this country, English was not, they were not always easy to understand. So what we did, I would sit with the founder. I had her teach me, what the process was to synthetically manufacture an ultra pure nucleotide. And that sentence 5 years ago, I didn't know what that meant, right? But I had her teach me that. And then I interviewed her for every single page of the deck and translated it into something that a buyer might understand. And then, because the most effective management meetings always start out with the founder taking the potential buyers through what the business is and where the growth might be, and then, getting into a Q&A, where she was really uncomfortable presenting. But she was like, when you would ask her questions, man, she would light up and she would just love talking about this stuff. So I recorded doing the deck on Vimeo with interjecting points in there about how she should segue from page to page. And the most gratifying experience I think I've had in the entire time I've been doing this, Fed, was watching the email, the alerts I was getting every time she would use that Vimeo channel. And then we decided that it would be uncomfortable for her to actually present page to page. So I would not let her go more than 3 pages without interrupting her with a question, so that she could relax from being scripted and just kind of talk about the next thing, work like a charm. It was a fantastic outcome for them. We developed a good friendship in the process. They hit all of their objectives, and she still talks about how the video and the teaching her to, kind of tell the story was a huge part of why we had multiple very, very large public companies very interested. It was a legit bidding war, and they killed it.
It's a fascinating story, and I think it's also just a reflection of how this industry is changing, in the sense that, and you talked about your own career path through finance, but it's just interesting to think that, what we mean to be an investment banker today, especially in the lower middle market where we operate, is much more holistic and simply coming up with a financial model, generating a list of potential buyers or investors, and sending a deck out, right? And so maybe, this would be a good moment to kind of segue into almost the raison d'etre of Candor Advisors, and kind of the way that you've approached your firm and how you think your firm is competitively differentiated against many others that purport to deliver similar services to founders.
Yeah. So, I mean, first, since boomers and Gen Xers have been so entrepreneurial, it's going to take a lot of, great firms to get these founders to the right outcomes. And our goal is always, how do we get the founder to the right outcome? That's why we spend so much time on the why. Because we want to make sure that if on a net after-tax basis, something like an ESOP or an owner finance sale could get the founder to the right outcome and the process of selling to an external buyer will be bruising, we want to acknowledge that. Now, many investment banks won't do that because there's no success fee when you do something with an ESOP, or there probably shouldn't be because the valuation is probably going to be lower. We decide that, it's purpose over profit. Now, some of that is that, we keep staff small. We work with Finalis to outsource all of the things that we don't have any particular skill at and would cost us a lot on kind of the G&A side. We wouldn't add any value to them, right? We outsource certain things like our graphic design guys in Bogota, Colombia, and a lot of the stuff that we do, we outsource, right? So that we can keep costs low and continue to be, I won't say indifferent. That would be disingenuous to say that we are indifferent after spending 3, 4, 5 months with a client at a consulting fee per month, that we don't care if there's a success fee at the end of it. But we have had 2 consequential transactions that we've been involved in, actually 3. One at more than 50 million, one at almost 200 million, and one closer to 300 million, where the founders have called the night before the deal was supposed to close with not cold feet, but reservations about moving forward. And my response in each case was, hey, I'm Team Fed. You tell me what the right thing is, and I will be the designated a-hole and go tell the buyer that we've changed our mind and we're not going to do the deal. You're going to have the sunk costs of having paid us consulting fees. You're going to have, the cost of the law firm. You're going to have the accounting firm. So if you think this will be like a stomach virus and it'll pass in a few days, let's talk through that, right? But if you really, really in your heart of hearts believe that it's not the right thing to go through with the transaction, then let's not do it. And I think some of what differentiates us is, first, we didn't start out to be an investment bank. We started out to be a transaction advisor. And the distinction is that we want to look at every possibility and we want to figure out how to meet the seller's why. The second thing is we don't predicate our existence on success fees. They're great. They're like liquidity events when we get them, but we can keep the lights on and do just fine with our consulting fees. We get lots and lots. We get more demand for what we do than we can service right now. And so we're looking for, different ways to scale that too. But then the other differentiator, Fed, is that I was an advisor for a long, long time. I didn't start out as a transactional investment banking guy. And I don't particularly like most of the buyers. So what happens is that, and there have been some great buyers that I've dealt with, but it's, kind of the broader set of buyers that kind of like I was saying before, I stand at the bulwark. So I am on the founder's side. I've just finished reading Danny Meyer's Setting the Table. Danny Meyer is Union Square Cafe and 11 Madison Park and Tabla and Shake Shack. I mean, he's one of the most successful hospitality entrepreneurs in the world. And I got on to Danny Meyer from a talk that Bill Gurley gave at Stanford, talking about Danny Meyer being one of the best entrepreneurs he's ever met, one of the nicest people he's ever met. And Danny Meyer talks about how the difference between service and hospitality is that when you're in the hospitality business, you are on the client's side. You are taking up the client's issue. You have their back. And I don't just mean that you structure for it in your terms. I mean, you stick your chin out. You invest your privilege. You invest your position in saying, okay, this is what matters to my client. The market might think, or seasoned deal professionals might think, that my client's ridiculous. I don't care. It's my job to go ahead and be embarrassed and go forward and say, hey, look, I know market says that this business ought to sell at 9 times, but my client thinks his business is worth 12 times. And he's not going to do a deal if we can't figure out a way, either now or over time to get him to 12 times. So if you really want it, let's get creative here. If I was worried about what the market thinks about me, or I was worried about getting buy-side work, I couldn't do that.
Yeah, it reminds me of, there was a book that came out last year. I don't know if you came across it, called Unreasonable Hospitality. Basically it paints a number of stories, including those of, 3-star Michelin restaurants. And it's very much along those same lines. It's ultimately about, having a giving mindset, right? That this ultimately always does come back if you start from that perspective. So it's fascinating to hear you say that, and to hear you say how you've brought that value into Candor. It didn't escape my notice that you launched Candor at the very early months of the global pandemic. And obviously, Finalis' own founding story was aligned with that. We launched into market in March of 2020. So I'd be curious to hear your own perspective about what it was like for you to launch and grow Candor Advisors in the midst of such an unusual time in the world, obviously, but also in business, in terms of having to work in a fully remote context.
Well, this is another one that, like, looking back on it, it looks prescient, but it wasn't. It was that I didn't like what I was doing. I couldn't afford to retire, and I also couldn't imagine that even if I could afford to retire, at 57, I would have just started, playing more golf, or, traveling a ton. Like, look, I love doing all those things, but I couldn't imagine not being purposeful. I couldn't imagine not being, I have kids that are today 18 to 32 years old. I can't imagine them not seeing me, like, with work ethic and persistency and, kind of staying out there, right? And so it was it just happened to coincide with the start of the pandemic that I decided to bet on myself after 30 years of thinking that I ought to have my own firm. I had had the name Candor Advisors on GoDaddy for almost as long as GoDaddy has existed. And what's interesting is that about 8 months prior to, this wasn't 8 months prior to the launch, but about 8 months prior to my starting to, kind of business plan, this is like a decade ago, I had forgotten I'd forgotten my password to GoDaddy. And I didn't go in and auto renew it. And like everybody else, I, have like credit cards that expire and I get new ones and whatever. So they didn't have my right credit card number on file. So I lost the URL. So the reason that it's candor-advisors.com is because there's some wealth management firm somewhere out there that snapped it up as soon as I no longer had it. But the idea for it's been around for a long time, but it's morphed. And it has morphed in the last 3.5 years since we started. We started out hoping to cover my basic costs of running the household and getting 2 more kids through college, and we'd figure out retirement, later. But those were the near-term issues. And what happened was that I reached out to, before I knew what Candor was going to be, I knew it was going to have something to do with founders, and I knew it was going to have something to do with using the breadth of my skill set to be able to help them. I didn't know how to price it. I didn't know what exactly it was going to be. And I thought it would probably be just helping founders find the right investment bankers, the right M&A lawyers, like sort of monetizing my Rolodex and years worth of relations and staying involved in the M&A business, which really lights me up, right? But what happened is that we got retained to be the consultant to a cannabis lighting company, early on. I mean, they were our 7th client, but they were early in our history because my network started referring stuff to me like, can you do this? Would you do that? Can you help these guys? I mean, it was amazing, right? And so the second day that I'm working with them, and I'm going to charge them a pretty healthy consulting fee for a 12-month contract. All of our other contracts were 3 months. All of the contracts I was putting out were 3 months. I sent out the 3-month contract to these guys, and they came back to me and they said, well, we like this idea, but we want you to work with us for the next year and then help us find an investment banker and go to market. And they said, so how much would that be? And I said, well, just multiply it by 4. And they said, and I quote, okay, we're down to spend money like that. And so poof, then we had this long-term contract. The next day, I had to get on the horn with a billionaire investor who wanted to put this thing into a SPAC. And 5 minutes into the phone call, he is dropping F-bombs at me left and right. And I'm telling him that he doesn't understand what the valuation ought to be. He's dramatically undervaluing it. Mind you, Fed, I've never even seen the financials. All I know from the guy is what they're doing in revenue and what they're doing in roughly net income. And I'm telling him his valuation's off, and I don't think SPACs are going to work long term. What do I know? He's a billionaire. The day after that, we get an offer from a public company that these guys had been in a lawsuit with for a while. And it's essentially, we'll settle the lawsuit by buying you. And poof, I'm an investment banker, right? Just like that. All of a sudden, like responding to that, we got to a massive outcome. Big public company has had some real problems because they did too many acquisitions and they bungled this and several others. But these guys got life-changing money. They are leading lights in the cannabis business. They're some of the smartest entrepreneurs I've ever met. And it was just great affirmation that we were on the right track. And that took up so much of the, kind of early days of the pandemic that it just meant that the logistics of meetings were trickier.
Fair enough. And clearly the logistics of team building, but it sounds like you've had some success, finding folks even offshore to help and support different aspects of the business so that you can stay lean and mean and focus on what you do best.
Yeah, that's absolutely been true. We don't really want to scale, but we would like leverage, right? And I would like to find a way, because we do get a lot of inbound demand for what we do. I'd like to find a way to help more smaller businesses get to exits. I know there are marketplaces out there for kind of small transactions. I have not yet met business brokers who I think, are kind of miniature versions or smaller versions of great investment bankers. That marketplace to me right now looks more like multiple listings, and you've got, people that are part-time business brokers and sell insurance the rest of the time, or they've got an exit planner designation, but they can also sell a business. And we get a lot of contact from those people that have been, they'd like to get a better outcome, but they don't really feel like the people that they're meeting with can do the kind of job we can do. And we can't take on too many of those projects just because we get contacted so often for pretty large transactions, much larger than I targeted when I started. I thought we would be doing, 10, 20, $40 million transactions, and, 310 is the biggest so far. And, we've got 100 plus and a 200 plus. And like, it's, there's only so many hours in the day and only so far I can stretch myself. And again, I don't really want to scale. I had the experience twice early on of, hiring people that were coming out of B school. They wanted to be investment bankers when they grew up, and like they were willing to do grunt work only as long as they had to. And they didn't like the way that, like my model is that, sometimes we're not going to get to an outcome, sometimes we're going to tell somebody, sometimes we're going to be using our research to chase away a bad buyer and tell the entrepreneur that you got to keep building the business for another couple of years till the market will pay him what it's really worth. And they didn't like that, and so my only employee, only full-time employee right now is my middle daughter, Allie. And she's fantastic. She's a background in advertising, PR, and project management. And we run so efficiently now because I don't have to worry about any of that stuff anymore. Like, I didn't know what Monday.com was a year and a half ago. I didn't use Slack a year and a half ago. I immediately could see the benefits of using like a chat GPT or any kind of AI to run our content through. But I didn't know what the gunning fog index was, and now I run all of our content through that. All those things are a function of kind of professionalizing the other side of the business in an effort to be better understood. So Allie's journalism degree and ability to communicate all of a sudden helps with our storytelling.
Well, who would have thought that the English language would become the most powerful coding language in the world?
Really well said.
With innovations like ChatGPT, where now careers that didn't even exist a few months ago, like prompt engineering, are starting to enter the fore. It's just fascinating to watch. And I'm really focused on, one expression that you mentioned earlier, which is we don't want to scale, we want leverage. And I actually think that that's very much aligned with what we've been observing from our vantage point at Finalis in the lower middle market. Specifically, we're talking about investment banking and professional advisory of businesses, because we see that there's a tremendous desire among individuals to have the type of leverage value that they might have otherwise achieved at a large bulge bracket institution like a Goldman Sachs, but ultimately to build their own business on the basis of their own values and monetize their own relational capital. And we have, one expression of that in Finalis is what we call the Finalis marketplace, which really is a platform for investment bankers and placement agents to find one another and collaborate on deals. And you had mentioned at one point early on in your journey, you had considered, well, maybe there's an opportunity to build a business around passing referrals along to investment bankers. But curious to understand or to hear your perspective on what you see as the potential for this sort of an environment in delivering more leverage value to small boutique investment banks such as Candor Advisors.
So look, I think that to say that Finalis is on the right track there is, maybe a knack for the obvious. But I will say that I think that in fundraising, syndicating deals and or putting things out there to people that are not as successful at business development, but who can find investors and get deals done, man, that's a natural for a marketplace. M&A works trickier. And part of that is that the more honest people will be about where they have subject matter expertise and what kind of deal size they're looking for, and, the way that they work with clients, it's harder to get most financial services professionals to narrow what they're saying so that you can truly find the right folks. And so the challenge to creating the marketplace is to say, hey, look, every financial advisor I talk to, every wealth manager I talk to, handles ultra high net worth individuals, and their average client has $1 gajillion, and they're kind of like an outsourced family office. And when I tell them that there's only a couple of million households in the United States out of 330 or 340 million people that have over 5 million in financial assets, so what they're saying can't fundamentally be true. I get that it's aspirational, but it can't be true. Well, the same thing I have found applies to investment bankers. Well, we're kind of generalists. More recently, we've done a few healthcare, services deals, and we did and every private equity firm, you ask for clarity on what they want to do, and they all want SaaS model businesses. Even if they're selling tractors to farmers, they want a SaaS model version of that generates 2 million to X million of EBITDA, that's asset light, non-cyclical. I mean, there are so the more we could get people to actually get clear, which requires a lot of humility, which is in short supply in financial services. But, so when we tell people that, like the life science transaction I was telling you about that's so rewarding, the first conversation I ever had with her, she talked to me because her M&A lawyer was going to mark up another investment bank's engagement letter. And he said, this might be the right firm for you, but you should talk to Kirk first. That became our call to action on our website, talk to Kirk. Because talk to Kirk first doesn't fit on the little green radio button on the website. It's just talk to Kirk. But so she did, and I said, listen, if I have read 2 white papers that I downloaded, I've looked at your website, I've looked at what I think are your competitors' websites, and I don't understand what a nucleotide is, much less an ultra-pure nucleotide. I don't know why I would care about that. She just started laughing. And she said, I can explain that to you, but Jim says that you have really good instincts and judgment, and I need that. I said, oh, well, that I can do for you, right? And so, look, I can tell you about the deals we've worked on, but to call myself a subject matter expert in anything, I can tell you where I have experience. But And I think if more investment bankers did that and said, look, these are the last 7 transactions we worked on, and this is, kind of the history of the deals we've done, and this is the average size of deal that we've done. If we could get everybody to be a little more legit about that, as opposed to aspirational and hustle culture and brand building, all of which is fine. But, if we're going to collaborate, we need more of that humility, more of that clarity. That would create a phenomenal marketplace, because then I would know, oh, there's a firm that does, nurse and allied staffing. They've done 8 transactions like that in a range of $15 to $75 million. Well, shoot, I have a guy I've been talking to for a while who's got that kind of business. I have never done a deal like that. I've gotten pretty smart about it, but I've never done a deal like that. Well, that's something I'm probably going to put in the marketplace, right? If I know that guy's there.
It is a fascinating user design challenge. That's for sure.
Yeah, I bet.
So we're coming to the end of our conversation, Kirk, and I wanted to make sure that you had the opportunity to plug any exciting plans or developments for Candor Advisors in the coming months.
Yeah, so I'll tell you that what's interesting to me, I've been on a few panels lately. One ACG panel, these woodworking people yesterday, and then a few other podcasts. And I get asked the question a lot of times, that's a form of how's the sentiment. And for us, the exciting thing is to dig deeper into the alignment between where we're good, where we resonate, and the sellers who are clear about their why and coming together on that. It's a little bit of I develop more and more confidence and conviction around this being the key to getting good deals done. And that is the idea that we form a covenant, me and the client, in the sense that if you do the following things, we will get to the following place, right? But we're going to do it collaboratively. Now, that doesn't mean that, all of my decisions get second guessed or that I tell them they're wrong about all the things they're thinking. What it does mean is that, I get to act as guru, guide, gladiator, right? So guru, I know things about M&A that they don't know. So, right, that's why they think they're higher. Guide, listen, in my experience, in my scar tissue, other guys who've done what you're thinking about doing have suffered in the following ways. I have seen other best practices go this way. So it's still your hero's journey. It's not mine. But since you've been good at building up this business, here's my guidance, right? Use your instinct, but my guidance. And then Gladiator, I want to work with people that are willing to kind of fight with me a little bit about the idea that their current self is in conflict with the future self that they have expressed to me. They want to get to a certain outcome. They want to have a certain level of equanimity. They want to have a certain level of, money, right? So if I'm working with people that are willing to dig in a little bit and see that they're their own worst enemy in these cases, and we can have a dialogue about that, I bet we get to a lot more good outcomes. And, so I'm excited to do more and more of that because we have plenty of pipeline and we don't have a specific desire to kind of move into a niche. We just want to keep working with a mindset, a framework.
Here. Just speaking for Finalis, all I can say is that we're thrilled to have the opportunity to partner alongside you into sharing your growth in the days to come. So very much looking forward to that. And Kirk, it's always fun to talk to you. Very much looking forward to continuing the conversation in the days to come.
Likewise, Fed. Thanks very much. Good to see you.
Thank you.
Finalis is a broker-dealer platform with everything that M&A advisors, investment bankers, and placement agents need to succeed. We deliver a broker-in-a-box regulatory affiliation solution, replete with tech-enabled compliance, research and analytics, deal lifecycle management tools, and a first-of-its-kind deal marketplace. Learn more at www.finalis.com. You've been listening to Pencils Down, a Finalis podcast. Keep connected with us by subscribing to the show on your favorite podcast player. If you like what you've heard, please rate the show. That helps us keep covering the latest in the private securities brokerage landscape. Thanks for listening. Until next time.